Hello everybody, welcome back to Valuation Investing, and today in this video I'm going to be going over Apple stock and why I believe their next earnings report on July 31st could change this stock forever, in which I'm going to be first going over the earnings expectations for Apple, then I'm going to be going into the business of Apple, then I'm going to go and take a look at the financial health of Apple, and then finally I'm going to be using my intrinsic value calculator to determine the price I'd be willing to pay for Apple's stock, and I'm going to be using a bull and bear case for those to see where I would stand on whether I should be buying this stock today. So first, I'm going to be looking at Apple's stock right here. As we can see, Apple's stock year to date is down a whopping 12%, which is underperforming the stock market. The stock market's up about 6% year to date, so Apple has really been underperforming the broader market. And if we take a look at the dividend yield, Apple has about a 0.5% dividend yield, so this is less than the market, but it does make sense because Apple is a higher quality company, and I think they're trying to keep reinvesting in the company instead of paying directly to investors. The company is trading at a $3.19 trillion market cap, meaning Apple as a company, if you wanted to buy the entire company today, that means you'd have to pay about $3.2 trillion. And right now, the stock is at $213 per share, so it's right between the 52-week low and 52-week high. So it's just been trading around pretty much stagnant, as we can see over the past few months. So with that being said, let's get into Apple's earnings, in which last quarter I'm going to be taking a look at. Looking at last quarter, we can see that their EPS beat by about 2 cents and their revenue beat by $652 million. So they both slightly beats on both the earnings per share and revenue. So I'm expecting pretty much the same thing to happen with Apple in their next earnings report. But I would like to add, look at the difference between earnings per share expectations for this next quarter, in which they're expecting this quarter to have about 20 cents less in their earnings per share. And with the revenue, they're expecting nearly $7 billion less in revenue. And I would like to add, if we take a look at the EPS revisions by analysts, the EPS revisions help us show a trend in what analysts expect this company to report, in which only 5 have increased their expectations while 20 have decreased their expectations. So this is going in the wrong trend for Apple. But as I said, with the difference in this last quarter compared to this quarter, I do think that that is not a big deal, because taking a look here, I'm going to say don't focus on the quarter-to-quarter growth, but focus on the year-over-year growth rate, because Apple is kind of a cyclical company, and normally during this time, this is one of their worst quarters, mainly because looking here, during April to June, this period generally falls before Apple's major product announcements. So this is towards the end of Apple's cycle of their new products, in which they're seeing a big slowdown in hardware sales during quarter 3. So that's why I think we shouldn't be focused on the quarter-over-quarter growth, but instead the year-over-year growth rate with this earnings. And taking a look at that year-over-year growth rate from last quarter, we can see analysts expect them $1.42 in earnings per share. But in 2024, they only had $1.40. This is a very small increase in earnings per share, not even 2% increase expected by analysts year over year. So that is very worrying to me, especially with the valuation of this company. But I would like to add, look at the revenue expectations. They're expecting to grow their revenue by about $3 billion. So at least their revenue is expected to grow at, say, 4.5% to 5% year over year. But the year-over-year growth rate looks very slow, and this worries me for Apple. Looking at the earnings per share over the past 5 years, we can see it is increasing over time, but it hasn't really been increasing that fast. Over the past 5 years, it's been going up at about 11%. While you might think that is fast, that is mainly from 2021 with this huge growth. Look at this huge growth rate in 2021. They had a bunch of growth, but as of recent, it's basically flat from their earnings per share. So that is not a very good sign for Apple. And as analysts expect them to report about $1.42, they're expecting to be at right around here. So not really much of a change in their earnings per share. We can see the trend in how first quarter is a huge spike in earnings per share and then slow down, and then it keeps doing that basically every year just because of the timing and seasons, because mainly holidays they're going to have a lot more sales. So this does make sense for Apple, but I am very worried about this stagnant growth rate over the past 3 years. And also taking a look at the revenue for Apple, we can see that analysts do expect them to have about $88 billion in revenue. So it's almost about the same thing right about here. So they're expecting a decrease from each quarter from last year, but it's not a huge decrease. And it is following the trend of Apple, but look at this revenue growth rate, basically flat since 2021. So this looks pretty bad on both the earnings per share and revenue growth rate, and that's a pretty big worry to me because of this slowing growth rate in Apple. And another big concern to me with Apple is the valuation, in which taking a look at the PE ratios of big tech companies, we can see that Apple has a pretty high PE ratio. While it's not the highest, it's about the middle of the pack for PE ratios, but yet looking at the EPS growth rate over the past 3 years, Nvidia was growing at 96% at a 55 PE ratio, so this makes sense. Microsoft, I think, is trading a bit rich at a 39 PE ratio. It did grow 13%, but Apple growing 0%. 0% growth over the past 3 years. And Apple is trading at a 33p ratio, while taking a look at Google and Meta, they have 10%, 17%, and they're trading at a much lower PE ratio than Apple. I'm not saying that this means Apple you should be very worried about and you should just sell the stock, but it is something to keep in mind if you're buying the stock, because this valuation is very rich for Apple, but it is a pretty big moat company, so it does make sense. However, this is one of my biggest concerns for Apple, in which it's the lack of innovation coming from Apple. Look at all this innovation from basically when the company began all the way to 2020. We saw a lot of innovation and new products, but the main innovation was obviously in the 2000s. But we also saw, say, AirPods and Apple Watches be made in 2010s. Obviously, they're still being produced and making money, but look at the lack of innovation in the 2020s. The only thing that has been made was the Apple Vision Pro, and the sales are very low on that, and it is making not even a dent in the company's revenue. So this is my big concern for Apple. If they want to continue to grow this company at a decent rate, they have to start innovating and making new products. And this is my biggest worry for Apple in the future. And yes, they do have AI being created, but I don't think that's really going to necessarily have people buy the iPhone just because of AI. And they are running behind on AI. So looking at the 5 key things I'm expecting for their earnings day, the first big thing is going to be tariffs and geopolitical risks, where the company expects to have about $900 million in their tariff costs. So they're expecting a pretty decent expense for that tariff, but compared to their revenue, that's not that much, since their revenue is nearly 90 billion. So this is about 1% of their revenue, but it's still going to have a slight decrease in their earnings. And I think if they have a full year guidance, if they make this higher, the stock is going to go crazy. I truly believe that. In last earnings, I'm pretty sure the stock barely didn't even move. But if they increase their full year guidance, we can see the stock soar. And the next big thing, I'm very worried, like I said earlier, is the company has to reaccelerate its growth soon. They need to start innovating, like I said, and I need to see reacceleration in its growth. And I'm slightly worried over the past 3 years, they haven't grown at all. But it is just a slight period in time, so we have to look at the big picture. It is growing over time, so I don't think the company is going to be dead, but I do need to see reacceleration, and that's my biggest key for this earnings, if they can start to see reacceleration in their growth. Then iPhone sales are in big focus because they are starting to lose some market share in China. So we would want to see these. So we would really want to see the statistics on the market share in China, and I really want to hope that Apple is starting to take over China even more and not losing as much market share. And then finally, I want to see buybacks from this company, because over the past few years, that's the only reason this stock has been going up, basically, is from buybacks and increase in valuation. Because Apple just a few years ago was trading at, say, a 20 to 25 P ratio. Now it's at about a 30 P ratio. So the valuation increased, and they're buying back shares, which helped the stock go up with their earnings not even moving. So I really want to see them buying back more shares, and that's really helping the company continue to grow. Taking a look at the financial health of Apple, I'm using my 7-step stock analysis, which I think is pretty important metrics to look at for a company. First, the PE ratio greater than 0, meaning the company is profitable. They're trading at about a 33 PE ratio. I would like to add that this is higher than the stock market average. I do believe that Apple is a greater than average company, but I would like to add that I think the S&P 500 is overvalued, trading at about a 25 to 30 P ratio. I think that I think Apple should be trading at about a 25 P ratio, but I don't think that the market should also be trading at a 25 P ratio. Ideally, I think the market should trade about a 20 P ratio and Apple at a 25, but the forward P ratio at least is near where I think it should be, at about 27, which is less than 30, meaning you're going to be paying $27 for $1 of future earnings per share. So at least that valuation isn't too bad. And taking a look at the growth numbers, we can see 9% revenue growth year over year over the past 5 years and 11% EPS growth over the past 5 years. So like I said, that while the earnings per share over the past 3 years has been flat, the 2 years before the last 3 years, they had really fast growth during COVID. So while this is technically going up at a pretty good rate at about double digits, over the past 3 years, it is a concern for me, but nonetheless, they are growing at a double-digit rate. Now for the shares outstanding, which is my favorite part about Apple, look at how much they're buying back each year, about 3%. This means that each year, you're going to be getting 3% more ownership in this company, and meaning you're going to get more earnings per share. And that's the only reason the earnings per share is increasing year over year, because of these buybacks. And now for the debt to equity ratio, which is the only problem I see with Apple, at 147%. That means that they have 1.47 times more debt than their equity. But I would like to add that their total debt's about $90 billion and their free cash flow is greater than $50 billion. So if they really wanted to, they could pay off their debt in less than 2 years. So while the debt to equity ratio looks very high, the balance sheet really isn't that bad and their debt situation isn't that bad because they can pay that off in just about 2 years. Now looking at analyst expectations, they expect them to grow at about 5% each year for their EPS, which is actually a lot higher than I would expect, but this does take into effect the buybacks, which I do think that this is really helping the company go up over time. So I do think that analysts might be onto something here with the earnings per share, but me personally, I think they're going to grow at high single digits, maybe if they're lucky, low double digits like they say here. But nonetheless, the 7-step stock analysis gets a 6 out of 7 rating. So far, Apple's financial health looks pretty decent. The only big problem I have with the finances of Apple is, like I said, the stagnant growth rate over the past 3 years. But I think in the future, they could reaccelerate that growth rate, and I would really like to see in that earnings that they do reaccelerate. So with that being said, I'm going to be using my intrinsic value calculator to determine the price I'd be willing to pay for Apple stock. So the first thing I'm going to do is do a bear case for Apple stock. So I'm going to be more conservative on these numbers, but after this, then I'm going to do a more bullish case on Apple. So for the future annual revenue growth rate, they've been growing at about 8 to 9% over the past 5 years. Analysts expect their EPS growth rate to be about 12%. So I do think that for the bearish case, I think they'll grow at about 6% each year. This is a bearish case in being conservative. So just take that into account because I'm not going to be bullish on this case. Now for the future profit margin. Their profit margin has been anywhere from about low 20s to high 20%. So I do think that the future profit margin should be in the low 20s for this case because once again, it's a bearish case. Right now, they're at about a 24% net profit margin. So I think a 23% is fair. In case in the future they start losing market share, I think that the profit margin could decrease if their moat starts to go away a little bit. Now for the future PE ratio. Like I said earlier, I think this company should be trading at a 25 PE ratio, but to be on the bearish side, I think a 23 PE ratio is fair for Apple, and the only reason I'm saying this is because of the future annual revenue growth rate I think is pretty low. Finally, I'm going to be looking at the shares outstanding of Apple, in which I believe they're going to be buying back at about 3% since that's where they've been doing for the past, say, 5 to 10 years, and I don't see that going anywhere anytime soon. So with this being said, I get a future share price of $344 per share with this bearish case and a total annualized return of 5%. So keep in mind, this is a bearish case for Apple, so please don't be grilling me about this. I do think for the bearish case, we'll see a 5% return out of Apple if you bought this today. But now I'm going to do my bullish case. So for the future annual growth rate, say they start to innovate and make more products that people like. I think that they can grow at about 9% each year, in which that's what they've been growing at about 5% and that's what they've been growing at about over the past 5 years. Now for the future profit margin, I think that their future profit margin could be about 27%. I think if in the bullish case, they can increase that profit margin to a pretty good high. Now for the future PE ratio, I think a 28 PE ratio is fair for Apple. And the shares outstanding, I think once again, they're going to be buying back at about 3%. And with that being said, for a bullish case, I get a future share price of $650 per share and a total annualized return of almost 12%. So if you guys believe in this bullish case for Apple, I think this is a pretty good buying opportunity. But for the bearish case, if you people are bearish on Apple, I'm definitely staying away from Apple. Me personally, if I were to buy this company, I would probably like to see Apple get to around $175 a share, or in just the high 100s. I would potentially start adding to a position. Me personally, I don't own Apple right now because I do think that they are facing some stronger headwinds than other big tech companies. But with this bullish case, it actually looks pretty decent if you bought today and if you believe this to be true. So thank you guys for watching this on Apple. Comment down below Apple if you stayed to the end of this video. Please subscribe, hit the like button, and see ya.